Good morning, afternoon, everyone. Welcome back to the breakfast show with myself again, solo. This morning, we don't have that much to talk about, but we'll do a quick market open on Friday. First up, good morning to everyone, whether you are in the waking up, afternoon, lunchtime, maybe some dinner for some of you. Really appreciate all of you joining. And yeah, someone did ask here, who's up this week, and I'm pretty sure most of us, if not all of us, are up pretty much this week, right? I don't think, unless you're shorting the market, I don't think you would be down right now. Of course, when the markets open on Friday, things can change. Thank you very much for the super chat, Never Sarcastic Man. Great content. Can you please explain the Oscar convertible notes and if this is bullish? I did a specific video. Well, I did include it in a specific video, but I'll touch on it again with the use of our friends at Perplexity, because they explained it in a very, very simple way. So let me pull this one up. In the meantime, everyone can join in, sit back and relax. We also have some extra information from the Intel Nvidia news from yesterday, because they did have a little call. And so we do have some information coming out of that call. So they're going to use it to fund growth and innovation, strategic financial management. So they see here, the company states that this offering has an attractive cost of capital compared to other financing alternatives, minimizing shareholder dilution because of the capped call transaction, which I didn't know before, but this is a very, very popular strategy more recently. So it basically gives them just the flexibility to move faster, maybe do some M&As and have a better financial positions. Yes, again, the bearish outlook are as follows, as always: potential for share dilution, the optics around this, right? Oh, they need external capital. Why is that? Is the business not profitable enough, etc., etc.? I don't think that's a problem. I don't think that's a problem right now. Of course, there's always risk, yes, in case of bankruptcy, who gets paid, etc., etc. Those are the usual risks. But in my eyes, this is just being opportunistic right now. And based on management's commentary in the last earnings call and analyst conferences, I have full confidence in them to do the right thing with with this raise, I don't view this as a bearish thing. I actually added more shares over the last couple of days. Now, pre-market, this is what we are looking at right now. We have one red name. AMD is down 0.7, but the big red name here is Micron, down 3.5. At the moment, first of all, I didn't even know we were close to $170, which is not bad. But at the moment, I did not see any specific news about Micron right now, but maybe a note will pop up pretty soon. But that's the only big thing. If you look here at the extended hour, so Micron is down 3.5, HIMS 1.2, DLocal is down 1, Iron 0.6. I think Iron was down yesterday heavily, more than the others. BMNR down 0.5, Reddit 0.4, AMD 0.6, and then Intel is now down 0.5, 0.6, but not such a big deal. All the rest are up. Who's up the most? Apple is up 1%, PayPal is up 0.7, and Rocket Lab is up 1.10% pre-market at the moment. Now, of course, yesterday I did a video about the Intel Nvidia news. And then we've got the analyst conference. Well, not the analyst conference. They did the press conference, and there were some analysts that were allowed to ask some questions afterwards. Jim Cramer was there as well on the call. And so what was mentioned is that this is not going to be a Nvidia using Intel Foundry deal for now. This is just going to be a product collaboration, and that's about it, which means that they are going to use a TSMC for now. From what we have understood, this is purely a joint collaboration on future products. No Intel Foundry involved as of now, which probably is also why TSMC rallied afterwards. Well, right, it just went up a little bit. Now, of course, this still opens the door for Nvidia to become an Intel Foundry customer down the line, not just Nvidia, but some other companies out there. Nvidia, of course, did say that, look, we invested $5 billion in Intel because we believe that this partnership is going to be great for Intel, the business. And so for us to have this partnership without us making that investment doesn't make much sense for us, which, again, also shows you that they're quite confident that this is going to be a pretty good partnership for them. They've talked about how big that market is going to be and is today. And so that's why they've invested in Intel, because if Intel wins, well, it's great for Intel, it's great for that partnership. And of course, it's going to be great for those $5 billion that they've invested, because, well, just like us investing in a company, they will see some upside there. But yeah, the most important, I guess, detail is that this is just a collaboration, a product collaboration between both Intel and Nvidia, something that they've been working on. Actually, they said it for almost a year, been accelerated under Libutan for the last 6 months. So this is not something new. They've been working on the architecture and all of that for a while now, which means that, yes, what we've said before yesterday, now we got the update basically saying that, yeah, this has been in the works for a while. And so we might be seeing these products sooner rather than later. Now, I'm saying sooner rather than later. It's not going to be maybe 2-3 years or so, but maybe a little bit before that. So that was good. Again, Libutan is growing on me more and more because, one, he knows quite a lot of people in the semiconductor industry, and he's a no BS type of guy. I mean, he's been here for 6 months, and look at what they've been doing. Balance sheet looks much better. Roadmap is still about the same, but now we're actually getting a little bit more of a momentum here. So I'm quite happy with that. If you haven't watched yesterday's video, I did eventually sell 22 contracts. So I had 44, $30 January 27. Intel call options, I did sell half of those for a very, very nice profit, and the rest I'm keeping because I have so much time. What am I going to do with that cash? Just leave it in the cash pile for now, and we'll see what happens with the market. Maybe I'll open that position in Rubrik, maybe not. We'll see. But for now, this is the plan, just to increase the cash position with the gains of that nice trade. JJ, thanks for super chat. Good morning. Still trying to build full positions on both Oscar and DLocal. Any valuation concerns on either given recent moves? No, not really. Again, you don't have to go all in those, right? You can just open up and accumulate over time. That's the thing. We are long-term investors, so we have time to accumulate, whether it's Oscar or DLocal. It's nice to see that Oscar did recover nicely over the last 2 days here. But look, it's still a company worth $4 billion. If you are in it for the long run, then you believe that this is going to be a much, much bigger company, right? So valuation-wise, I have no concerns here because the growth story is still the same. So Oscar, no, I have no concerns. Just you don't have to go all in. And that's not just for Oscar, that's everything, right? You can accumulate over time. As for DLocal, I'll say the same thing. Look, we were higher after the earnings report because, well, it was a tremendous earnings report that did beat expectations and then some. Then we got that stupid pullback here in the secondary offering, which is good because it increases the float, which means that maybe in the future they might be doing some buybacks. We got that pullback, but as you can see, a very, very nice recovery here. No issues on valuation whatsoever. Still a very small company doing business in a gigantic market. Of course, they're focused on the global south, emerging markets. GDP-wise, those are the economies that will be growing the fastest in the next couple of years, based on analysts and economists' projections. So on both of them, no. And me personally, I am accumulating more and more shares. Another nice super chat here. So opening any, this is a good one. Uber or PayPal? Well, you know me. You know me. I am an Uber PayPal bull, pun intended. Look, with PayPal, I will say this. I do think that we are seeing a little bit more momentum with PayPal. I've seen more bullish commentary on PayPal this week than I've seen over the last 6 months. Of course, 6-7 months ago, the stock was higher, but okay, fine. So look, with PayPal, it's very simple. You're buying a company that is extremely, extremely undervalued and hasn't moved much for a long, long time. And the big move might be coming. With Uber, you're buying a company that has seen its stock go up 50% or so this year alone, right? There's still some upside left, but it's definitely not as cheap as a PayPal. I own both. But if you're asking me, I'd probably be way, way more comfortable buying a PayPal today, for sure. For sure. Andre, thank you. Good afternoon. Do you know anything about Next? Saw Matt and Tevis. Yeah. I honestly, no. I don't know anything about Next. When I saw the ticker pop up, I thought it was Next Door, but apparently it's not. Apparently it's this, unless it isn't even. Yeah, I think it's this ticker now. Next Decade Corporation. No idea what they do. I don't know why it started to pop up on my feed, but yeah, the stock did crash more recently. So let's actually see. Next Decade. Is it a energy play or something like that? Maybe. So okay, yeah. Liquefied natural gas. Interesting. $1.7 billion in market cap, enterprise value of 8.4. Okay, because of the net debt being so high. PE, there is no PE. Yeah, you see, these are companies that might be interesting for some, but for me, not at all. Not at all. And now that we are on Next, is Nextdoor actually public? It is public. What happened with this one? Wow. Yep, this one is is down. But no, unfortunately for the other one, I have no clue. I have no clue what they do, and so not that interesting. Not that interesting, and not that interested. Sorry, not that interested. The trade desk is still 46. Wow, it dropped even more. 43. Okay, 43. I know this is one that has been very popular. Well, it's still a very good company. Don't get me wrong. It's still a very good company here. We are now here back at the April tariff crash bottom. So we are also oversold, but we've been oversold for the last week or so. I'll explain again what I've explained in my other videos. Let me actually zoom out real quick. So with the trade desk, the story is very simple, right? Because I know a lot of you probably hold it and have questions about it. The trade desk. Here, the trade desk, very good company, very, very expensive. Okay, very simple. Then we crash because the trade desk, for the first time in 8 years, missed guidance. Okay, so we crash, bam. Missed guidance, first time 8 years, you have this plus the fact that the stock is extremely expensive. Then sentiment changes a little bit, and we also have the whole tariff story and the crash that pushes down the stock even more. Okay, April Liberation Day or Liquidation Week, we bottom. We bottom just like every other stock bottomed back then. We went back up. Then earnings report, we see a pop. Why is that? Because the issues of 3 months earlier were gone. Okay, they didn't miss guidance. They said whatever happened 3 months ago with the delay of the launch, we're back on track. Okay, good, we're up. The problem afterwards is that we went even higher. Again, I did a video about this, so I'm not saying, oh, you say this because the stock is down. No, I said this in the video before the reported earnings. I thought the stock was going up way too quickly. And again, it became too expensive to own, even though this is a good company. And here as well, bam, stock got completely crushed. Not because the results were not good. The results were good, but they're growing slower than before. And there are some questions about the competitiveness of their business, right? Is Amazon, is Meta, are those types of players going to be a threat to the trade desk's business? During the call, they told us no, no, no. The market, as you can see, clearly does not believe that. The stock dropped even more after the, what was it, Amazon and Netflix announcement for the advertising side of things. So that dropped even more because, again, it contradicts what they said during the earnings call when asked about Amazon's advertising threat. And so now we're back here. And if we go and look at the trade desk, valuation-wise, we can see the following thing right now, and I'll maybe zoom in so it makes it even better. $21.4 billion in market cap. PE trailing 54.7 times, which of course is much, much better than its average. Much, much better. Forward is even better than before. It's now 23.9 times. Margin-wise, we're very good here across the board, so no complaints there. As you can see, the company previously was growing 24.5% compounded for the last 3 years. For the last 5 years, that was 31.5 times. If we look at the forward 2 years, that's now down to 17%, and EPS growing only 13.3% compounded for the next 2 years. So you are now growing slower than before. And so it makes sense that your premium goes down. Is it a better price today than before? 1,000%. 1,000%. Why don't I own it? Simple, because I own Meta and I own Google. And why? Both of them are, of course, advertising plays. So why would I own another advertising play and pay a premium for it, right? Because if I buy Meta and Google on a trailing PE, you are paying less. I mean, I do wonder what Meta is trading at right now. Meta is at Look at this. Meta is at a trailing P of only 28.1 times and a forward of 27.3 times. But the company at this size is still expected to grow revenue 17.7% compounded for the next 2 years and EPS 11.7%. So again, you're asking a very simple question to yourself. Why would I get exposure to advertising if I already own the biggest advertising players? If you're saying yes, it's because of the huge upside and the growth potential, then fine. But here I just show you that a company of this size, Meta size, is expected to grow revenue faster than the trade desk. And on a trailing PE, it's cheaper. On a forward, it's a bit more expensive, but yeah, of course, you're going to pay a little premium to own Meta today. So that's the reasoning behind this. I'm not bearish the trade desk. I just don't see why I should be buying the trade desk if I have exposure to the other names. If you don't have exposure to the other names, then I guess you missed out on two great companies. But yeah, it's still a good company. But I don't feel that I need to own it right now. The question of questions, right? When do you think SoFi? I don't know. I don't know when. It's not a question of if, it's a question of when, right? It took a while until Robinhood got into the S&P, right? Because remember, there are plenty of companies that qualify to enter the S&P. SoFi does qualify. I don't know when that will happen, but it will happen. So we just have to be patient and we'll see. We'll see what happens. I'm definitely not going to base my SoFi thesis on, we are going to enter this. No, I honestly, I couldn't care less because I know that we are going to enter eventually. Nothing really changes from that perspective, for me, at least. Let's see. Melly. Yeah, you're right. Melly, maybe I should cover Melly pretty soon in a video. What's happening with Melly? Nothing much, actually. Literally nothing much. We did a little pullback, and now, I mean, we're still at 2,476. It still is one of the most comfortable holdings in my retirement core portfolio. I don't see that changing anytime soon. I know the biggest question is, when are they going to have a stock split? That is a very good question. But I don't know. I don't know when or if they will have a split anytime soon. And yes, I did see the failed video call, the failed demos actually during that event. And to be honest, I couldn't care less, because at least they have no issues failing. Right? They could have pre-recorded all of this, but they wanted to try and do it live. It didn't work out. It doesn't change anything for me. I actually like that they have the balls to try these types of things. Seems like the classic couch type. Which one? Which stock are we talking about here? This one, Root, the insurance company. Yeah, I know this one has been crazy. This one has been crazy. I mean, it did pull back quite a lot, but since the breakout here, start of 2024, it has done exceptionally well. I don't know what has happened last quarter for it to crash so much. So yeah, maybe it is worthy of looking at real quick. As for Zeta, I did look at Zeta. I think I was one of the first ones to actually talk about Zeta on YouTube before this thing broke out a little bit. I still think it's cheap, and I still think that they might be acquired. I still think so. So Root, it is this one. Yeah, it is this one. Still $1.5 billion in market cap, trailing P20, forward 85.4, free cash flow yield, I see here 14.5. Okay, gross. Interesting. I do know that, yeah, they did grow extremely rapidly. Let's see. What can we look at? Let's look at the quarterly real quick for this one, just to see what has happened last quarter. Interesting. So gross combined ratio 94.3, gross loss ratio 58. So it did tick up a little bit here, as you can see, but it is down on the trend. Net loss 66.1. Total net. Okay, so this has been one of the reasons why I guess the stock did soar or start to soar when we saw it, which makes sense. I know a lot of people do compare it to Lemonade, but Lemonade did also start to move quite rapidly, especially I think maybe in the same period. Yeah, approximately. We were at 18.8, and then it shot up to 50.3, and then we went back down to 24 start of April, and now we're back here. Actually, we are higher, 57.3. I do not own it anymore, though. Zeta is at $21.02. Very nice. I covered this right here. $12 and something on Zeta. Has something changed? No. It's just a good company. That's it. It's just a good company that executes quite well, and it got more attention. That's it. It got more attention from retail and I guess the market as well. But yeah, it's an interesting company. Definitely interesting. Do I want to own it? No. Like, there are so many companies out there that I'm interested, but I will not own, just because I don't have to own everything. I just don't have to own everything. I did cover Rubrik already twice on the channel, but it was included in a video with other names. I might maybe do a specific video about Rubrik. It did recover this week a little bit. So we did go under that 200-day moving average. We are now back above it, which is good. Now let's try and stay above it. This crash right here happened after the earnings report. The earnings report was pretty good. Commentary was good. Most analysts upgraded their price targets and had some positive commentary on it. So I did not really understand why this crashed, but it was an opportunity for people that were interested in Rubrik. So yeah, it's a very good company that is growing quickly. I think $14 billion or so in market cap. A lot to like there. And Ethan, thank you for the super chat. I guess you wanted to include something in it. So let's see if I can find your message. Here it is. Can you check Virtu? Yeah, it's one of Emir's favorite play. Wow, what the heck happened here? I guess I'll send a message to Emir to dig deeper into it right now after the recent crash. Actually, I link. One moment. I will link his Substack so you can go and check it out, because he did cover Virtu when it was way cheaper. It's definitely a very interesting company that does make money no matter what. So I don't know what happened here. Maybe some reports on some policy changes. Something definitely happened, because otherwise you don't see this major sell-off day after day after day after day, and there aren't even any like earnings happened before. So, and it pays a nice dividend as well. So yeah, I'll ask him. This is his Substack. It's in the chat, or just go to Emir's channel or X and you can find it there. He covered this one. We of course covers Palantir, PayPal, FICO, I think S&P Global as well, and some other names. You can also commission some research, specific research. I do think that he's working on a SoFi one, so that's going to be very, very interesting to hear his thoughts on SoFi. I now already know which one this is. Rezolve AI. Yeah, it's one that exploded, and it's one that has Microsoft, Google, and whatever, and something else on their website. We did have a look at it quickly on previous streams. Yeah, I guess it's interesting, but other than that, I don't know. Let's see what we can find here. So AI solutions for commerce, $1.7 billion in market cap. Based on this, definitely not profitable. Definitely not. I don't think there's that much information on it. Let's see if we even have. Okay, this doesn't make any sense. This does not make any sense. Like this jump right here is does not make much sense for revenue, because it says like revenue is expected to explode 2,100% for the next 2 years compounded, but that would mean that they would generate a ton. Or actually, no, maybe not. Maybe not. Let's see. No, okay, this makes more sense because this makes more sense. This is 33.9 million. So I guess that's why it exploded, because something came online and they got some revenue in the pipeline already right now. For a second, I was there. This doesn't make any sense. But okay, this was in the hundreds of thousands, and now we're going to the millions, basically. To the millions, which is why the stock did go up significantly over the last couple of months. We are up year to date 66.7% and 328% on a 6-month trailing basis here. But the growth is basically because they were generating literally a couple of dollars, and now it's going to be in the millions. So now you can understand why the growth was so high. Alibaba has been very, very kind to me since I bought it late last year. I mean, year to date, we are up 93% now. So very happy with that one. Look, valuation wise, of course, we are not expensive. Even after this rally, we are definitely not expensive, but it's a Chinese stock, so you will never get the same premium, I guess, unless suddenly the market does change its sentiment completely on these types of names. I don't think that will happen, but in the meantime, I am still a holder of Alibaba. Bought the dip a couple of weeks ago, I think a month or so ago, and so I'm quite happy with that one. 40% of investment is insider. The warrants are over too. I guess I'll have to dig in a little bit more, because I didn't have the filings here on fiscal.ai, because I think it's still a company that is very, very small compared to the others. I did have a look yesterday very quickly. Not that interested. I'll be honest, not that interested. Even though I'm a user, I am not that interested as an investor in E-Toro. They are doing fine for now, but there are just better opportunities out there. I think even Webull is doing better. And if you really want, just go with Robinhood, because I think they are best in class. That's just my thoughts on that. Let's see if something changed. Pre-market still have the same names that are down for now. That is, this is our pre-market action. Um, I mean, this has always been the case, right? This has always been the case when, for example, remember 2022 when the market crashed. People were not that interested in stocks, yet it was the best opportunity to buy a lot of the names that are up now significantly. And so, yeah, a lot of us now do come in when things crash, which is great, which is why we have those therapy sessions sometimes. But the overall, let's say investor population comes in, yeah, when things are up significantly. When things are up significantly, it's just the way humans work, I guess. When things are uncomfortable, they are uncomfortable, and when things are comfortable, then we like to be in our comfort zone, which is why we have a nice little comfy couch as well. Um, Micron reports next week. What date are we today? 19. So yeah, next week on the 23rd, Micron reports. Now, just so you know, they did raise guidance for the the upcoming earnings report already a month ago. So we do know already that it's going to be a pretty good one. But it's about guidance afterwards and commentary on the earnings call that are going to be interesting. For now, we do have a lot of momentum with the stock. Um, Sometimes you do have that one or two analysts that does come out and say that, oh, demand for HBM or whatever is coming down and they have pricing issues. And then you had Micron come out and say, look, we might actually be sold out for 26 as well. So but buy before, I don't know, for a trade, it's always tricky. It's always a tricky one for trades. What do I think about Snowflake? Um, Snowflake is what, back above 220 now. Okay, not bad, not bad at all. It did have that earnings pump, and now it did have a nice little pullback. Pullback. We're at the 50-day moving average. It's a good company, nice growth. Good company. You too, Justin. Appreciate you coming in. It's a good company with nice growth as well. It's definitely not the cheap ones, right? It's definitely not the cheap ones, but they are growing. They are growing. And remember last year, when was it? Here, the start of last year, CEO gets replaced, guidance is very low, and so the stock completely crashed. But we know what happened. Guidance was low because there was a new CEO. Company was still growing fast, and so we've got basically from the bottom in September, which was a year ago, the stock basically doubled over the last 12 months. Some might think, oh, this is not good because it's only a double. Well, it's a double in 12 months, so it is tremendous. It is tremendous. My birthday, April 3rd, my portfolio tanked but went all in, and it has, I mean, yeah. So, happy delayed birthday and congratulations. You know, that's funny. There were a couple of times where on my birthday, a specific stock that I owned also bottomed, and it happened twice. It happened twice, and I was like, is this a sign that I always have to buy on my birthday? I'm trying it out. I'll try it out for the next couple of years, and I'll tell you if something scientifically proven here. Probably not, but you never know. You never know. What's my outlook on Rocket Lab? $100 billion company. That's my outlook. That's why I bought it, and that's why I hold it, and that's why I'll keep averaging up. Until it's not a $100 billion company, I will not be satisfied. And I don't think Sir Peter Beck will be satisfied either. There was one question here that Where is it? Off topic until I find my question here. Off topic. Yesterday, for the first time in my life, I played Padel. I know. For someone that loves tennis to play Padel, it's yeah. I actually liked it. Not gonna lie, I actually liked it. Was actually fun. And for people that do play tennis here, you are going to adapt quite quickly to this new sport. But now that I did find the question, we can continue. Can you give a quick elevator pitch on DLocal, thinking of opening position? Elevator pitch. You have Stripe and Adyen, very popular, right? Payment processors and all of that. But they are focused on everything but, I'd say, emerging markets. That's where DLocal comes in, the global south, the emerging markets, the South America, Africa, Middle East type of countries. They deal with that. They have an integration with our API. They do it on a horizontal integration, not on a vertical one. It's a very small company. It's growing quickly. It's already profitable. The CEO is the ex-CFO Mercado Libre. Execution has been tremendous. I like the company. I like the fintech space. I like the fact that they do focus solely on markets that are unloved by the big other competitors, but those are markets that are growing very, very quickly. Voila. Iron going to 100 before end of year? Probably not. Probably not. We are already up so much, right? We're already up so much without a deal, in anticipation of a deal, though. And so end of year, it's another 2.5x or something like that. Would be very difficult unless you have a deal, of course. And again, I'll repeat, I think a deal will come. I just don't know when. And that's why I keep holding my shares, and I'll wait. That's it. Because in the meantime, they are printing money on that Bitcoin mining business, which helps them build out the other side of the business, and then we'll continue from there. AMD, where are we? Oh yeah, quick update. AMD, as you can see, yesterday, green candle. We were still down, but you can clearly see that the market understood that this Nvidia Intel thing is not really going to destroy AMD. I've also showed in my video that, that a year ago, we had Intel and AMD announce their x86 ecosystem alliance. That's not going to go away anytime soon. So the fact that the x86 ecosystem will continue to grow, yes, for Intel, it's a pure win. What happened yesterday, but it's not because Intel is going to win a lot that suddenly it's bad for AMD. Not at all, and that's why you're seeing, and you have seen yesterday, the stock recover. Holding PayPal for 1 year. Why don't you own PayPal for 3 years or 5 years? You'll probably have higher returns. If I were to open, I'd buy today. Voila, that's very, very simple. If I were to open, I would I'd start buying today. Padel, how do you find it? No, I've known about it for a long, long time. I just boycotted the fact that it destroys my tennis courts, because every time I went to a tennis place, I suddenly see fewer tennis courts, more paddle courts, because one tennis court can basically be cut into two, and you have two paddle courts. But now that I think about your question, you're asking if I like it. Yes, I liked it very much. I like it very much. And table tennis or ping pong, yeah. I mean, if you're good at tennis and you played ping pong as well, then paddle shouldn't really be an issue for you. The fact that you are in a type of aquarium, right, with the glasses behind you, does add a very, very nice aspect to it all. Because the people, like, when I smash the ball in tennis, like, probably I'm going to win the point because the court is much bigger. But in this case, someone can smash the ball. It just rebounds from, like, hits the ground, rebounds the window. Then you can still recover. You can still recover that play. So I like that aspect of an extra, let's say, dimension. It's pretty cool. It's pretty cool. Iron dilution and iron price targets. I don't know. Could we head back to 20? It's definitely possible. If they maybe dilute, then you have that effect of bringing the stock back down. It's possible. If we have a deal or something, then it could go much higher than 50, depending on the amount of the deal. Ondas is the drone/network company. I know some people think it's only drones, but they also do cables or something like that with trains, I believe. I know this is something that I've covered Ondas at the start of the year. So whoever listened to me at the start of the year, you are up a significant amount on this one. I will update you on Ondas, on the other RR, on Rolls-Royce and all the other drones and robotics. I know I promised this already last week, but it's been quite a hectic week. So I'm not in Ondas. I'm also not going to chase this right now because, yes, it has become a bit more expensive than I would like it to be because there is a lot of anticipation. A lot of anticipation or expectations, sorry. A lot of expectations baked into this stock, baked into how do you write this? Dragonfly? Yeah, a D. Okay. Same with this one also. Like, look at these swings. This is crazy. But it's all about, we like the drone market. We know that drones are going to be a big thing. And so this goes up. Kratos is a better play, I think, which is why it has skyrocketed, because Kratos actually has already another business as well. And so I'm not surprised that we're seeing this, although maybe here you're also overpaying a little bit. AeroVironment has also performed quite well. They have also a whole other business. What other names? There is Symbotic, but that's more robotics. That's more of a robotics play. The Rich Tech Robotics, this is one that also exploded more recently. But here as well, it's a lot about hype and future expectations and anticipation. Do be careful about this. Just because you mentioned Nvidia in a blog post or whatever, I don't think it's enough for me to pay up for a high valuation. Anduril IPO, I don't think I've seen Anduril IPO for this year. I do hope that they do a DPO and not an IPO. But yeah, if they do go public, and I think they will, hopefully DPO, I definitely am going to buy it, like on the first day, and then just continue to add more shares, and that will be my my autonomous drones defense system, whatever play. But I don't think I've seen anything about an IPO this year, unless I missed it. Paddle tennis is squash. Paddle tennis and squash combat. Yeah. Basically, yeah. Because squash, you are also inside, and now in this case, you're just extending, which basically you duplicate, you mirror a double squash court. It's a good example. Good example. What would make you pull the trigger on Rubrik? Personal. Like, if I want to add an extra company to the portfolio or not. That's it. I could technically do it with the money from the Intel call options. I could definitely do it, actually. But maybe I just want to keep a bigger cash pile for now. But I'll of course let you know if I do open. What would you think about a sufficient retirement amount? That is a very good question. I guess it depends. The number is definitely very big, because you have a family, you have kids. How old are your kids? How old are you? So the number is in the millions, for sure. The numbers are in the millions. I don't know how many millions, but if I throw a number, 5 million. But again, 5 million depending on how old you are, how many kids, if you are married, if you're not married, and what you want to do with your with your life afterwards. But if you give me 5 million today, I'd be happy. I'll be happy. I don't know if I'll retire, but I could maybe retire. Like you invest a big chunk of it, and the rest you just live. What's my end game for Nebius? I mean, the end game is this becomes the AWS of AI, and so the end game is much bigger than $100 billion in market cap. So yeah, another 10x is definitely possible in the next decade or so. And I know it's crazy. What 10x in the next decade? That's not much. It's a tremendous amount. It's a tremendous amount, especially when your average is still quite low, and we're at $25 billion today, or no, maybe a bit higher, So that's the end game. Well, end game. I mean, again, if it does become an AWS of AI, then why would I sell it? Because it's going to be so profitable that they might expand and maybe pay a dividend or whatever. No, it's not the only cheap one, but it is. I mean, Fortinet is cheaper, and Fortinet is an incredible company. It did get hit, yeah, it did get hit, but Fortinet margin-wise and still growth-wise, it's not expensive at all. Okta is another one that is not that expensive. Interesting questions. I'm generally so interested in knowing how you and others find undervalued small market caps. Well, I usually only talk about mostly above $1 billion in market cap. Because I think when companies are above $1 billion, it's already much easier to follow them and study them, because reporting wise and all of that makes it easier. And how do I find them? Well, if you look at the list of stocks that we do follow here, then a lot of these companies are, of course, operating in different industries. And so sometimes you just look at competition, okay, who's also in that market, etc., etc., and then you land on other companies. For example, in the fintech sector, we talk a lot about SoFi, PayPal, DLocal, but we've covered Adyen, we've covered Chime, we've covered Dave, we've covered Affirm, Sezzle, and so you can expand, and it becomes much easier to find those smaller players, right? I think Sezzle is still very small of a company, has been consolidating here around $90. I think Dave is around the same market cap, did recover here on that 100-day moving average, a good company. Chime is a bit bigger. Yeah, it has been finding a little bit of support here, $23 or so. And then you can use stock screeners. Like you can use it on fiscal.ai. I am sponsored by them. I have a link, but I guess other platforms offer screeners as well. But you can put like, yeah, I'm looking for companies in US markets, maybe European. This is the size of the company. This is the sizes that I want you to look at. Revenue growth above 15%, let's say. EPS growth above 15% as well. And then sometimes you can add other specific things. You search, you screen for it, and you get a list of stocks. And then if these are sectors that interest you, you just dive deeper. Not only that, the investing community retail-wise is very big today. On X, on Reddit, if you are on Reddit, you can find a lot of due diligence. You can find a lot of just reports from other people that share it for free. You can start there. It's very easy. Plus, there is, of course, us on YouTube. So yeah, that's my answer. Recently subscribed. Thank you very much. I find your insights and investment targets extremely valuable. Enjoy your comments. Thank you very much. Thank you very much. I do get quite a lot of positive comments recently, which is probably because the market is at all-time highs and everybody's making money. But I do hope to get those comments when the market does have a pullback and things look like they looked back in April. But I think most of us already experienced crashes, and we know that these are usually opportunities. I heard someone mention Nebius might have margin problem because they need to keep spending billions to buy new chips every few years. I mean, isn't that the thing that everyone's doing? Buying GPUs? It's what you do afterwards that's important. I mean, every big tech company buys from Nvidia. It's not like a Nebius specific. It's not a Nebius specific thing. Like without the GPUs, what will Nebius do? Like sell flowers? I don't think you get far with it. But it's what you do afterwards, and that's going to impact margins, which they've told us more recently that actually the margin profile is looking quite good. Is BMNR overhyped? Maybe. Yeah, maybe. I hold it, by the way. I hold it. Yes, I jumped in. Roberto jumped in as well. But is it overhyped? Probably. But then again, if they do succeed, I'm not going to complain. Let's see if Jose wants to come and ding ding ding. Let's see if he will answer. Let's see how the comments are in a recession. Correct. I mean, we don't even need a recession because, again, for a recession to happen, people need to understand we need 2 consecutive quarters of negative GDP growth. So that's 6 months. We'll see. Remember that in 2022, they told us that there's a 100% chance of a recession. I am still waiting. Waiting for that. But yeah, even when the stocks do go up, I do have. I went back to my video earlier this year when Tesla was at $250, and the video was called "I bought more Tesla shares." Wow, the comments I got there, my God, the insults were quite something. But I went under each and every comment, and I said, like there was someone came in like literally a week and a half afterwards that this aged like milk because the stock went down a little bit more. Jose does not want to come on. People are asking for you. But yeah, the insults and the comments there were quite something, and now we are at 422. Of course, in the public portfolio, I have no Tesla anymore, but in the retirement, I still have my position. Although less of a percent of the overall. Because yes, I do think there is definitely a lot of future potential hypothetical growth baked in. And with that, we are going to open the market right now. So ding, 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 ding. Without Jose, it sounds a bit different. But ding, 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 bing, bong, bing, bong, bong. We are now open. Markets are open. But we have here a comment, a ding, 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 ding comment from Jose, the guy. If he is in Florida, Oscar is green. If he's not, but we have an Oscar is up 1%. Ladies and gentlemen, he does it again. It is quite something, you know. He's not here, and Oscar is up. Well, for now. We'll see what's okay. For now, we're looking okay. The heat map is probably going to refresh pretty soon. Voila, it did refresh now. Looks a bit worse, but yesterday was a pretty good day. But yeah, we wish Jose a very nice and quiet weekend, and we shall see him back on Monday. What do I hold? Where is this? What do I hold in my retirement portfolio? Number one is Meta, then Amazon, then Mercado Libre, then some Tesla, and of course, even more of Google. But yeah, Amazon was actually at one point number one. Meta became number one because I have been a very, very aggressive buyer of Meta back in 2022. You can also go back to the videos of 2022. For Meta, it was a no-brainer. So let's see what we have here. Let's start with what type of red we're seeing here. So Broadcom, Micron are red, like over 1% to 3% red. AMD down a little bit, Intel down 1%. So I think Intel is just going to plateau now at $30 until probably the next earnings report, or until we actually hear maybe some foundry news. Who's this? Fortinet. Just talked about Fortinet. It's up 3%. Very nice. Tesla is up 2%. What is this? Airbnb, not much. So, Jose, CoreWeave is up. CoreWeave is up significantly. Maybe let me refresh this because it's always the same with this watch list. So CoreWeave is up 4.8%. I did see something about CoreWeave come out this morning, and let me share that real quick. Well, too many price targets today. Okay, so we do have CoreWeave here. Loop Capital initiates with a buy rating and a price target of $165. The analyst sees the P&L upside and EV to EBITDA expansion as new cloud demand accelerates. So the price target is based on, again, pricing multiples. So 10 times EV to EBITDA calendar year 2027. The analyst expects multiple expansions as visibility improves in 2026. So that's why CoreWeave is up 4%. I own shares. Jose owns a lot of shares. So we are quite happy. HIMS, I am also quite proud with my call on HIMS. I don't own it, but I did say that it does rebound on that 200-day moving average quite a lot of times. And it did just that right here at 41. I don't own it, but I do know that a lot of you do own it. So congratulations. Iron is up 3% after being down, I think, 7% or so yesterday. AST Space Mobile is making its way back above the 100-day moving average, $42. Apple is up 1.6. New 1.6. SoFi, my God. SoFi back up 2.4%. Let's go. Imagine SoFi $30. That's going to be something. Oscar is up 1.82% now. I'm telling you guys, Jose is not on the stream, SoFi goes up. It's very simple. It's very simple. Uber making its way a little bit back up. Then as for the rest, Hood here at 100, trying to make all-time highs. Marvell is at $75. Google is still $252. Very much overbought here on the daily. Applied Digital at $20. Rocket Lab still the same here. I might actually buy a couple of shares. You know what? I might actually buy a couple of extra shares because it does seem like it's holding up on that 50-day here line. But of course, my neck. But the big catalyst is going to be, of course, that Neutron launch later this year. PayPal was green, we are now down. It's crazy. Like for PayPal to move, we need like a Jensen Nvidia type of partnership, or like a $17 billion deal with Microsoft, and that's going to like explode. This is crazy. Like, how many good news can PayPal have, and then the stock just doesn't move? It is astonishing. I'm not gonna lie. It is something else. It is something else. Then, as for who's red, Intel is red a little bit. Micron is down 3.6, but okay, fine. Reddit is red a little bit, but we're also fine here. Neo has gained a lot. Yeah, I know. Neo has doubled, I think, in the last couple of months. Yeah. Since July, Neo has doubled. Well, that's the trend with a lot of Chinese companies. Because if we actually look at the KWEB, the ETF, it has also gained nicely over the last month and a half. If you look at Baidu, I've showed you this already yesterday or 2 days ago. Look at this. Baidu, pew, nicely up. JD, probably the same thing. When at 30, okay, 35, maybe a bit less. But Baba has seen a nice recovery. So there's definitely a trend here. Chinese stocks as a whole going up. Am I still holding Intel? I have no shares. I still have 22 call options. Yes, so the same call options as before. January 27, $30 strike price. I did sell. I had 44. Now I have 22. So I sold yesterday 22. If the stock price does pull back, then I just might use the cash to just buy the shares, just buy shares again, and that's it. Yeah. So that's the play here. With that, where yes, thoughts on Grab. Grab has also seen, so maybe like Asian stocks have gotten a lot of love recently. Yeah, look at this same pattern. It's quite something. Even though this happened in the last 2 weeks. So with Grab, where are we here? Pew, up 32% in the last 2 weeks. It was stuck, right? It was stuck in that $5 area for almost a year. For almost a year, yes, it did go up and down, but we were around this for quite a long time. We see this breakout, right? We see this breakout right now. I don't own Grab, just so you know. I don't own Grab. I own Uber, which owns a percent of Grab. That's it. I covered Grab last year under $4, I think. Good company, good execution over time. This one also over time, it can become, yes, $100 billion company. So a 5x over time, because I do think that it was worth, maybe now it's more, but back then around $20 billion, $18 billion or so. I do have PayPal and Intel still. I have PayPal. I have PayPal March 26 and June 26, $100 strike, and January 27, $120 strike price. The June one I did add extra I opened that one last week. Last week, and those ones are already up almost 30% or so. So the other two I'm down a little bit, but the June one are up. The June ones are up. But yeah, it is risky, because if the stock doesn't move because the market just thinks that this is not a good story, even though the business is doing well, then I am screwed on timing. That's the thing with options. You are playing with time here. Because I know that the business is doing better. I know that it is undervalued, but the market doesn't care, and the market cannot care for a long time. And with options, you are getting screwed because of the time aspect of it. But it is what it is. If it does work out, I am going to print money on those if we do reach $100 before March, which means after 2 earnings reports. Because The reasoning behind my PayPal call options, one, I still hold shares, but way less than before. The reasoning behind this is, one, the business today was better than before, and before we're at $90. So the market clearly at some point decided that, oh, it might actually be worth pushing this up. Second of all, the strike prices and the dates that I chose gives them at the minimum 2 quarters, 2 earnings calls, and plenty of analyst calls as well, in order for management to send the message and for the numbers to send the message to the market that, look, we are now in growth mode, in profitable growth mode, actually. In the June one, of course, I'm giving them 3 quarters, and in the January 27, I'm giving them a lot more time. So I have no worries about the January ones. The March ones are going to be time sensitive. The June ones should be fine. But yeah, that's the thing with call options, is that you are playing with time. And SoFi is, it's 80 cents away, but I'm not going to jinx it, so forget about it. I'm not going to say anything. Iron up 5 now, 38. Look, with Iron, it's either the market knows something, or this is purely because of Nebius, which, yes, some of it is because of the Nebius deal, but maybe another deal might be followed here for Iron. And for those that don't know, Iron is actually Iris Energy. That's the name behind it. Rich Tech Robotics is also up 7.5%. I guess I have some reading to do this weekend. Yeah, Iron was down yesterday, 7% or so. Correct. Barrick Mining. Is it like a mining business, or is it Bitcoin mining business? Whoa. Or a gold mining business? Probably gold, no? Like the name Barrick Mining is probably a gold one. Let's see. The ticker symbol is just B. Barrick Mine. Yeah, it's a Canadian company, so definitely minerals. Yeah, okay, makes sense. Make a sense. My pleasure, Josh. My pleasure. And despite them being up so much, there is a long, long way to go. Hey, Neil, what about Micron? Have you any thoughts of diluting prior to earnings? Aha, so this is what happened? Well, luckily we have Tyrus Ham that tells us what has happened with Micron. I did not know. So this is what we missed, and this is why the stock is down, I guess. Although I'm still not seeing anyone talk about this. So let's see on their website if we do see something. So what you're telling me, they have raised money, which is why we're down. Where are we? Let's see, SEC. SEC filings. If we can see something from today. Okay, so this was yesterday. Yesterday, what did they file? I don't know. Doesn't want to load. Yesterday, nothing. No, it's just an insider selling a little bit. So I did not find anything about them diluting. If you have a link, I'll happily take it. No, I meant about diluting your own shares. I'm here looking at what the heck. No, I'm not selling. I'm not selling anything. But yeah, and I'm not selling on I'm not going to sell any shares of Micron going into this earnings call. I know very well that the stock has run, right? We ran up quite a lot, although it's not that expensive. It's not that expensive. So Michael to Zeus. What is that? Zeus Power. For a second there, I thought this was Michael Carrick. Why? What? I had to double check. Is it up or down 52%? It's up, but it was up a lot more before. What happened there, Michael? A deal or Zeus shareholders approved previously announced $150 million private placement on Bitcoin Treasury. Okay, here we go again. Okay, so Bitcoin Treasury strategy here for that company. Thank you for a super chat. Oklo, yes. Look, it will be a winner, okay? It will be a winner in nuclear, one of those probably. But is it hype? You tell me. You tell me. $15.5 billion in revenue today. Okay? $15.5 billion in revenue today with no revenue. $15.5 billion in market cap with no revenue. And like I can't even see any expectations here of anything. So yeah, I'm sorry to say, but yes, when you're paying $15 billion for something that is still not generating anything today in revenue, right? Losses still increasing. You are paying a significant price here. And last time I checked, I think only in 27, yeah, here. Activity starting groundbreaking in Q3 and commercial operations only late 27, early 2028. And so you are paying here already for a lot of future growth and then some. So yeah, that's my thought about it. I mean, it was expensive before and it just became even more expensive. You can be bullish on nuclear, which I think most of us are, but that does not mean that we should be chasing these types of things. Christoph, thank you very much for the support. And yes, this is the full-time thing. Although I am working on something on the side at the moment that we shall reveal in the future. This is fiscal.ai. Yeah, there is a link. There is a link in the description, or maybe not in this description, but in this one here. But I'll add it afterwards, or just look at all the other videos have it. So yeah, this is what we're looking at right now, market-wise. Oh, Intel down 2.8 actually now. Interesting. Actually, a little bit more. Let's do a quick overview. So Micron down a tiny bit, I mean, compared to where we are. Intel down 3%, probably because of the manufacturing comments yesterday, but we're still up significantly. Duolingo is down 0.4, PayPal down 0.4 as well. Reddit down 2%. I do think that I've seen a report that Google and Reddit are in discussion for another licensing deal. So that's going to be good for them, I guess. AMD is flat. So that hasn't moved much today. SoFi is now up the most here on our list. Then we have got Iron, Then CoreWeave, Palantir still doing well, $181 after that $1 billion agreement in the UK. Red Bull, I don't know why I wanted to say Red Bull. Uber is up 2.6%. Oscar is up 2.2%. Very nice. Very nice. What I want to say? Rocket Lab 1.3. Okay. Thank you for a super chat. Appreciate that. SPGI. SPGI. Oh, wow. Okay. Something. What? Why? What happened? That's my question. SPGI. Let's see. No, I didn't see anything about this. Was it earnings? It's down a lot on someone else's earnings report. Who's that someone else? FactSet. Aha. Okay, no, it does actually. It's quite because they issued soft fiscal year 2026 guidance and missed Q4 consensus. Okay. I mean, if you're done so much on another company's report, usually it is an overreaction. I don't follow SPGI closely. Emir does. And so I guess we have two questions to ask Emir, one on Virtu and one on SPGI. But again, just because FactSet had weaker than expected guidance does not mean that SPGI, S&P Global here will do the same thing. Actually, if we look at last quarter for S&P Global, that was up, right? There was a good quarter and it was up. So if they have seen something weak, they might have told us this right here a month ago, but they didn't. And so again, I don't know. I didn't look at the company, etc., etc. But usually, if it's another company saying something and you're down so much, I mean, so much, it looks horrible, but it's only 7%. Then yes, it might be an opportunity, but it's not really a company that I will add to my portfolio, just because it doesn't fit the profile right now. I think I did look at it once on stream. It looked very interesting, but not too interesting to me. It looks interesting as a business because it's doing well, but that's about it. ACM Research. Yeah, let's quickly look at it. ACM Research. They develop, manufacture, and sell single wafer wet cleaning equipment. Again, equipment makers in the semiconductor space. $2.3 billion in market cap. It has been growing fast, but it's not expected to grow, I think, that fast in the future, if I remember. Although, yeah, okay-ish, I guess. Okay-ish. Not my thing. Not my thing. But now that you did mention equipment makers, what is ASML pulling back or not? Ça va. Not much. Lam Research, same thing. I did already share my comments like half an hour ago about this. Again, I prefer just E-Toro. E-Toro. I prefer Robinhood. Where can I follow him? This is his Substack right here. This is, let me show you. This is his X account. And then from there, you will find your way into anything else that he releases. Thoughts on UnitedHealth? What is UnitedHealth doing? I still have my shares, by the way. I still have my shares. Thoughts still cheap. Still cheap. We do have definitely some momentum now and some positive news coming out. But yeah, we still have a long way to go. We still have a long way to go with this one. So patience is key. Although with UnitedHealth, I think my strategy should have been options here, like 26 or 27 call options. But I went with shares. But that's because I didn't do options before. Like my Intel call options were the first options I ever bought ever. And it turned out to be good ones. But like I said yesterday, winning your first hand at the casino is the worst thing that can happen to you. So with that said, I think I'll retire for the day. Looks good all in all. Someone's asking me here about cake. I have 0.000 interest in the Cheesecake Factory. Like literally, give me anything else that will be more interesting. I don't even think the food is that good. That's it. My mom's cheesecake is 10 times better. And so, with that said, I wish you all a wonderful Friday and a very, very good weekend. There will be a video coming out later today. I don't know what about. You'll see. Tomorrow and then Sunday, as always, the portfolio update, and we should be back on Monday. Jose will be back, which means enjoy seeing Oscar green, because there's a high probability that it will be red on Monday, unfortunately.